Okay, so thank you everybody for joining us tonight. I'm really excited to share with you how you can live your best life by getting your money right. So me and Sabrina are going to give you a great evening tonight. So I hope you find it beneficial. You can take some notes if you want, take some screenshots if you find that helpful. So with that, we'll go ahead and get started.
Sorry, didn't want to move. There we go.
Oh, here we go. So here's a little bit about who I am. My name is Dawn Santoriello. I'm a certified financial planner and president of DS Financial Strategies. I'm also a best-selling author and speaker. I wrote The Spiritual Path to Prosperity, The Truth About Money Revealed. That became a bestseller in 2021 on Amazon. And my next book is due out early 2023 called Manifest and Invest, Live Your Best Life, Get Your Money Right. I've also been published in Hollywood Times, Medium.com, Thrive Global, Advisors Magazine, featured in the Philadelphia Inquirer, Market Watch for, oh, you know what? If everybody could mute themselves, I forgot to monitor that. Also on the CPA Client Library, Next Avenue, Yahoo, and Pop Culture Express. I'm also one of the elite EdSlot IRA advisory groups. We're only I'm one of 500 in the country who are a part of that great group that helps people with retirement as far as it goes with taxes and how to avoid and minimize those taxes. I also have a show on YouTube called Financial Fridays with Dawn, which you can find under my company name. And I've been at this over 17 and a half years now, helping clients reach their financial goals with peace of mind. So here's what you came for. I'm going to share with you 5 steps to live your best life. And trust me, I've had years where it was so scary. I mean, I was literally doing manual labor and bartending to get by. And I share that in my first book. If anyone has read that, they know that. But things have turned around, and how I've done that, like this year, for example, 2022 was my best year yet, year to date. How I did that, I just decided I'm going to live my best life. October of 2021, I had a bad breakup and I was like, what am I doing? I'm always waiting to travel. Wait till I have a boyfriend so I can go travel and live life. I'm like, screw that. I immediately signed up for our Fem City trip to Italy. And I didn't worry about, okay, where am I going to get this money from? I knew it was just going to happen. So I just took action. I decided that I don't care. I'm doing what I want to do. Later that year, I manifested a brand new car. I wanted to travel at least once a month. So I went to the Bahamas twice, also went to Italy, went on some great trips with my networking group. And then one of the things that took forever to manifest was, I remember in March when I was with my friends in the Bahamas, I was like, I want to get us a yacht, guys. Well, I found us a boat, but then come October, when I was at my trip in Miami, we manifested a yacht. So, so you can do these things too. One, you just got to decide, I'm doing this. I'm living my best life. 2023 is going to be my year. Step 2, let go of who you think you should be and just be you, because there's only one you. So in your business, if you have a business, don't try to be someone else. Don't copy someone. Bring your unique style and your unique voice to the table. That's what I did when 2020 hit. Again, I used to be in scarcity mode, always afraid of, I'm going to run out of money. Where am I going to find money? What's going to happen? Everything's going to fall apart. Soon as COVID hit, I don't know how, but boom, that fear disappeared. And I was like, you know what? This is it. I'm going to shine my light. I did my first event and shared with people, okay, this is what I do. I combine spirituality, like law of attraction, with financial concepts. So get the best of both worlds, show you how to manifest that money and then what to do with that money. So I led with that. And I asked them when they came onto my complimentary consultation call, I'm like, why did you even want to meet with me? Because you're real. You say it like it is, and you're a real person, and you explain things, financial concepts in easy to understand terms. So that's my advice to you. If you own your business, don't copy anyone else. Be you. If you work for someone and in a company, be the best version of you can be. Don't try to copy what your coworkers are doing. Don't be afraid to stand out and shine, because that's how you're going to get noticed and get promoted and go to the next level. And step 3, you got to trust. Now, if you've done the work, you've cleared all your blocks and things that are holding you back in life, especially like finances, like you're here right now, you're going to learn how to invest. You're going to learn. It's very simple and easy if you follow these strategies. So you're already taking action. So trust things are going to work out. The next step is to be very clear and manifest what you want. I have this great technique that works all the time, that I'm going to share with you. I wrote it in my book, and I'm going to manifest that all of us here on the call and all of us listening to the replay, we are going to have our best 2023, our best year ever. So if you're open to it, just follow along with me. And at the end, when I say, I want you to say, and thank you, God, for that for me. So here it goes. Thank you, God, for this for us, for everybody on this call and on the replay, that we all have our best 2023. We have the best career opportunities, our business flourishes. We have all sorts of abundance flowing in all different kinds of ways, gently and easily. We get that new promotion, we get that new job, we start that new career, we find that perfect mate. Everything you ever dreamed of, we want to start that process right now, starting to happen. And also, let's just end this year with a bang too. Let's have something amazing happen before the end. We have 1 month, so let's make something really amazing happen for in the best way for me and all, or something better. And thank you, God, for this for us. Love energy, clear, heal, and change anything that prevents this prayer from being answered. And let us all be happy no matter what happens. And thank you, God, for that for me. So now something great is going to happen. I don't know what. I never do. And it may not be exactly what you were wishing for or expect, but it always happens. And countless times I could share stories. Well, example, me and Sabrina, we were at our conference just this past October, and I ran into this attorney who's also a financial person, and he was trying to sell his law practice because he wanted to just do the financials. And he was having the hardest time. He's like, I live in a rural area. Nobody wants to live here. I can't find anyone to take over my business. And I asked him, I'm saying, are you a little open to anything? He's like, I am desperate, so I'm open to anything you got. So I did this technique with him. And then the next morning I asked him, hey, so what's going on? Anything happened? He's like, not yet. I'm like, don't worry, it's not in our time, it's in divine timing. And then at lunch, he runs over to me and he's like, guess what, Dawn? He's like, this woman I've been chasing for 4 months decided that she's going to buy the practice. I'm like, that's awesome. He's like, thank you so much. He's like, you made my day. You made my year. He's like, I think you even made my life. I'm like, well, it wasn't me. I just, shared this with you. And so I was really happy for him. So that worked. Another client, we did it for a house that he wanted. He didn't get that house, but a couple months later, he calls me up and he's like, I got this other house. It was $50,000 less. So it does work. So now something good's going to happen for you guys. Now, here's another thing too, because people always ask me, well, what happens? I'm saying nothing's happening. Well, it's also your mindset too. When you are manifesting, like I said, clear all that stuff around you. Don't be negative, because negative, you will also manifest negative. I know a lot of you on here are probably very powerful manifestors. So even if you're thinking negative thoughts, sometimes it happens. Like I'll think thoughts too, and they really happen quick. So we have to monitor that. And if you really are down, you have to get yourself into a higher vibration. So how you do that is find out what makes you come alive and what brings you joy. For me, it's dancing. So I turn on the radio, start dancing, and then I'm happy. I'm in that great attracting state. For you, maybe it's going for a walk in nature. Maybe it's singing a song. So whatever it is, get into that right frame to pull you out of that slump, so that way you can begin manifesting. So, and then finally, step 5 is get your money right. You have to know how to invest your money, how to save it properly. So tonight I brought my colleague on, Sabrina Williams, and she's going to teach us how to invest in the stock market. So Sabrina, you can take it on over.
Thank you.
You're welcome.
As Dawn said, I'm Sabrina Williams. I am the Chief Operating Officer at Efficient Advisors. And at Efficient Advisors, we partner with Dawn, and we've been working with her for about 4 years now. And we provide her tools to help her grow her business and be able to really focus on her clients. And one of the tools that we are able to provide to her are educational pieces on investing, and those that she can share with her clients and prospective clients. So one of those tools is what we're going to be going over this evening, which is Smart Investing Simplified. Investing can be scary and daunting, especially if you're not sure exactly how markets work, or there's a lot of nomenclature that people just don't understand. And instead, I think a lot of people rely on the media, or maybe taking advice from a family member who's not really sure. And unfortunately, what we're investing for is our future. Is typically your retirement. And sometimes people just fall really short if they're, trying to go it alone and don't have someone that's really coaching them through this, someone like Dawn. So I think that the main components when we're looking at investing should be looking at risk, the cost, the return, and then the probability. Ideally, if you already have a portfolio, what you want to do, the goal is to identify where some of these items are. And what we want to do is lower your risk and lower the cost, and therefore increasing your return and the probability. So, like I said, the goal would be to look at your investments and identify where those arrows might be going in the wrong direction. And then if you're able to work with a coach like Dawn, then you would have recurring meetings where you're still watching this to make sure things aren't getting out of line. Maybe your risk has changed. If you're a little older, maybe the risk level isn't quite where we started out to be. So just keep this in mind when you look at investing, are these 4 items and how you want those arrows to move. So like I was saying earlier, a lot of people will look at the media for the answers or how to invest, but consistently beating the market is pretty difficult, if not impossible. You may hear these talking heads on TV saying they know what the next best thing is. But to be honest with you, if anyone really knew, I don't know that they'd be telling you. It seems kind of silly to do that. I don't think I would. So what it boils down to, if they do beat it, is it's luck. It's not any skill that anyone really has. And all that boils down to this law of large numbers. So in the US, there are over 50,000 stocks that you can invest in, about close to 29,000 mutual funds, and a little over 2,200 ETFs that any investor could invest in. And when I talk, you'll hear me talk about managers, professional managers that maybe work with Fidelity, American Funds, Franklin Templeton. They all have these investment managers that are out there picking mutual funds, picking stocks, seeing where they can go. And, using Fidelity as an example, they'll tout, and you may read this in their ads. They'll say, our investment managers have beat the market X amount of years in a row. And good for them. And maybe they did. But maybe only one of those 1,200 did, but they'll say ours, right? And when you look at this, if there's 1,200 of them doing it, eventually, yes, one of them is going to hit. And they have this large numbers to choose from. So someone's going to hit. Again, it's not skill. It's all just luck. It looks a little bit like this. So if say you're in Vegas and you have 1,000 roulette wheels spinning, eventually you're going to hear someone yell winner, right? It's just the odds are someone's going to win. But again, it's not skill, it's all just luck. So the thing to mainly think about when you're investing is stay out of the casino. You do not want to gamble with your retirement or with your future. And I think Dawn has a little story about gambling.
Yes, actually, this weekend I was with Katie and her dad and her sister and everyone, and we were playing poker. It was the first time I ever played. So I was like, I'm going to go, it's not my money, it's fake money. So I'm going all in. So the first hand I won big, I won it all. And then the next 2 or 3 hands I lost. And then her dad, my brother-in-law, said, oh, and you're the financial planner and you lost all your money. I said, well, this is not investing. This is gambling. And you should not do this with your retirement or anything that you're trying to save for. You got to be prepared to lose everything if you gamble. But when you invest, you're actually using evidence-based investing to help you reach your goals. Gambling is not a way to reach your goals. It just proved the point. Gambling is a way to lose your money really quick.
Right. So in the reality, like I said, those professional managers or the media and those talking heads, they pretty much end up underperforming what benchmarks are. And talk about benchmarks, I'm sure many of you have probably heard, like the S&P 500 or the Russell. These are the things that they're benchmarking what the returns should be. So what happens for individual investors that are kind of going on their own and trying to do this themselves is that the investment returns are much different than the investor returns. So what I mean by that, we're going to take a little look at this chart. If you see the dark line, that is a total return. The black line is kind of a little further out than the blue. This is the total return that a particular, asset category, investment category, the returns did. So total returns are the black line. The blue are what investors' returns did. And what's happening here is that investors, again, going on their own and listening to either the media or brother-in-law who says, I think this is what's going to happen, is they're getting in and out of things. So you hear like, oh, this one's doing really great, so I'm going to go to that. And maybe it does do really good for a couple of years, and then it's like, oh, guess what? This other thing's doing better. So then you jump to that, and then you jump to the next thing and jump. So getting in and out of all of these asset classes is very detrimental to your investments. So, working with someone like Dawn, she can help you create a very structured portfolio and keep you disciplined. So I want to look at what diversification can do for your portfolio. Like I said, Dawn can help with this structure and what an average investor ends up getting. So over a course of 20 years, looking at the S&P 500, strictly invested in that, which is the U.S. largest 500 companies, that is returning like 7.5. A diversified portfolio built of 60-40, which is 60% equities and 40% fixed income, very conservative, not conservative, I'd say it's a moderate probably. That over 20 years, you can yield about almost 6.5%. If you are only invested strictly in bonds, very, very low risk, you can get close to 5%. But that average investor who's going it on their own, just like I showed you in this previous slide, how maybe you're jumping in and out because you're hearing different things, unfortunately is only getting about 3%, barely beating inflation. So that's not good if, again, you're saving for your future and for your retirement, so you can go on these yachts or go on these trips. So looking at that diversified portfolio of 60-40, and then what an average investor is getting at 2.9, the difference between those portfolios is about 3.5%. And maybe, just talking percentages doesn't really resonate with people. I want to show you what that looks like, in dollar values. So that 60-40 portfolio over that 20 years, that gets you about 6.5%. $100,000 invested can grow to $345,000, where that average investor is only getting the 3%. Over 20 years, $100,000 is only going to grow $177,000. That is a difference of $168,000 over 20 years. So, $168,000, you can do a lot with that. That can make you, have a very comfortable retirement. And that is what Dawn definitely wants for all of her clients. Really teaching them how to get this out of their portfolios. But what happens is it's behavior, right? I think that slide that shows what the investment returns and what investor returns end up being, it is behavior. You get scared, something's going down, so you jump out and go get into the other thing that's going up. Eventually, like I say, everything that goes up must come down. Sometimes that's what happens. And listening to those talking heads that say they know what's going to happen, they're predicting that all off of past performance. And if anyone's ever read those fine prints that always say past performance is no guarantee of future results. So when you hear someone say, I know the next best thing, it's probably not true. So investing, I feel, is a team sport. It's not a solo adventure. You want to work with a financial advisor, someone like Dawn that's going to help coach you through this, reel back your behavior a little bit, and keep you very disciplined. So what Dawn's investment strategy is one, structure and behavior. Those are the keys to success. Two is modern portfolio theory. Three is the efficient market hypothesis. And four is the multi-factor model. So we'll dive into each of these just a little bit. So we've talked about the structure and the behavior. The behavior is key here. And sometimes, people, especially how the markets have been lately, people have to be reeled back in and understand, this is okay. The structure is very, very key. Like I said, I mentioned the word diversification, so we'll explain what that looks like here in just a second. But you want to have a very well diversified portfolio. You don't want to be all invested in things that are going to go in the same direction. You don't want singular stocks, just to hold a singular stock. It's very risky. You want to make sure the cost, remember that slide at the beginning had a little box of those four things, the cost and your return. So you want to make sure, again, that those arrows are going in the right direction. And in turnover, what that is, we're talking about those active management, getting in and out of things a lot. This is something you don't want to do. We look at, and Dawn very much look at a passive strategy. In the modern portfolio theory, you'll see this curvature line here on this chart. That is the efficient frontier. And I think Dawn will explain this to you a little bit more at the end of this presentation. She can do a risk assessment with you. And what that will do is it's a questionnaire. It's basically seeing where your risk level is. Maybe how soon do you need to use that money? What makes you comfortable so that you can sleep at night and feel like your money is okay? And you'll get plotted on that efficient frontier based on your risk level, which is the standard deviation. And then that should include exactly what your, not exactly, but roughly what your expected return should be. So we're going to take a look then at a modern portfolio theory in a investment. So which would you choose? We have investment A that has an average annual return of 15% with the standard deviation. Remember, that is your risk level at 35%. And then we have investment B that is a average annual return of 12% and the standard deviation of 15%. So the return isn't very far off what investment A is, but that risk level has went down tremendously. And remember, we want that arrow to be going down in your risk. And so that annualized growth then for investment A is about 5.5%, and investment B is a little over 8%. And that's where that green arrow was going up. So what this is really explaining to you, what modern portfolio theory is all about, is reducing volatility. So volatility can reduce your returns. So you want to bring any unnecessary volatility out of your portfolio. And Dawn being able to do that risk assessment and even do an assessment maybe on your existing portfolio to see where that volatility may lay. So with the efficient market hypothesis, again, active management strategies, that jumping in and out, that does nothing but hurt your portfolio. So the evidence-based investment strategy, it's designed to reward very disciplined investors. Like I said, it's that behavior. So we want to keep you very disciplined and in a structured portfolio. This is showing here where we can gain some returns by adding various aspects into your portfolio, making it very diversified. So in the first column, you'll see a 1 month T-bill, very, very safe. Compared now, if you take that and then you add in this market factor of getting into those very large US companies, you can add almost 7% of a return just by adding in a little bit of going from very safe to some risk. And you're having that dissimilar movement by adding that in. And then there's also a size factor. Like I said, the S&P 500 is your US large. Now we're going to add in some small companies, adding another 2%. And then we're going to go with the value factor. You have some growth companies. Now we're going to add some value companies in, adding in almost another 3%. And that's, I'm going to show you exactly then what that looks like. And we've talked again about that diversification. So I want to build that portfolio for you so you can understand what I mean by the diversification and having dissimilar assets. In portfolio one, and I apologize, some of this might be a little small to read, but in portfolio one, you have the S&P 500. Again, like I said, it's the US 500 large companies, and only invested in that. So this is holding a lot of those large companies, the Apples and the Coca-Colas, Amazons. But all of those kind of move in the same direction. So with that, yes, you can get about an 8% return, but your risk level in just owning that is at 15%. So that's a pretty high standard deviation. So in portfolio two, we've taken the S&P 500 and now we're adding in some bonds, some fixed income. You've taken that annualized return from 8 down to 7, which isn't very bad. And you've dramatically decreased your standard deviation, that risk. You went from 15 to about 9. Now we're going to add a little bit more. We're going to add in some of the small companies. We talked about the large US companies. Now we're going to add small in. And adding small in, your annualized return compared to portfolio two is still roughly about the same. And your standard deviation does go up a little bit. So in portfolio four, we're now going to add in some emerging markets and some international. And so now we've got an array. We've got large, we've got small, we've got the value, and we've got your fixed income still. So portfolio four is a completely diversified 60-40 portfolio. And you can see then the annual return then on that is about 7.5%. So you're not very far off from the 8 of being in a very risky portfolio. Standard deviation down almost 10. So you're still down 5 from what your very risky portfolio one is. So let's take a look at what that looks like again in dollar terms. So taking that risk down, we did what we wanted to do. What we talked about on that very first slide. We reduced the risk from taking just the S&P and building out a very diversified portfolio. We've reduced the risk by 35%. And the return can still go up. This is a 60-40, like I said, it's a very moderate. You could go into a higher portfolio, like a 95% equities, 5% fixed income. And I'll kind of show you what that looks like here in just a minute. Oh, actually right now. So So portfolio 5 is now the 95-5. So here we are. Again, you have portfolio 1, that's all S&P. So the annualized return was 8. Standard deviation was at 15. You have a very strong diversified portfolio in the 95-5. And the annualized return goes up a little bit to the 8.25. And the standard deviation is still the same. So you've got to think when you're looking at your portfolio. So maybe if Dawn, say she analyzes your portfolio and your risk level is kind of high, but you're okay with that risk level, you could still go more into a diversified portfolio and have your assets spread among more things instead of just in one fund like the S&P 500. So again, we had that hypothetical $100,000 starting value over the course of about 20 years. You know, that 8% in the portfolio 1 would get you about $598,000. And in the portfolio 5, you would get about almost $620,000. So that's a difference of $20,000. And $20,000 can make a difference again in your retirement. So the simple truths in investing are, your beliefs and your behavior. Those will greatly impact your returns. Like I said, that behavior of jumping in and out of things. So it is best. Again, it's not a solo sport, it is a team sport. So you kind of need someone there to help you and rein in that behavior. Same thing, jumping in and out, that active management, just all it does is raise your volatility in your portfolio. You really want to go with the evidence over hot managers, those touting our managers, our professional managers beat the market. Like I said, Fidelity has 1,200 of them. Someone's eventually going to hit it. And diversification, adding those various levels into your portfolio, the large, the small, the value, the growth. You're wanting to add a lot into your portfolio, not be in just one asset class. And then back to the behavior, you want to stay disciplined. And then with working with someone like Dawn, she's going to have you in a diversified portfolio, keep you disciplined, and her partnership with evidence-based advisors, we are able to do the rebalancing for you as well. So we keep your portfolios in the right strategy that you requested. And those 3 keys are pretty much your buddies when it comes to your portfolios and your future. So if you, again, working with someone like Dawn, you can definitely have a great future, especially if she manifests it for you. I'm sure she can. Right.
Yep. Well,
Dawn, I will turn that back over to you.
Great. Well, thank you so much, Sabrina. So let's recap what we learned. We learned how to have your best year. Basically, you got to just declare it. So I want you all to declare it now. 2023 is going to be your year. Come on. Also, we have to work with someone who knows what they're doing with your money, because even if you know what you're doing, you were too close to it. You get too emotional. It's better to have someone else handle it, because emotions get the best of everybody. Even the wealthiest person, emotions can take them down. So I've actually had an example of that. My wealthiest client, when was it? It was 2020. He told me he knew what was going to happen. We were both invested in the same aggressive portfolio. And I said, well, I'm not going to do anything. You have access to do it on your account. It's just 401k. And yeah, he lost the fee that he would have paid me the whole year in just 3 days, because he knew better. So don't go it alone. I'm here for you. I have many clients here on the call with me. They can attest to that too. Make sure you're diversified. Make sure you know what your risk is and what you actually own in your portfolio. And discipline. Stick with the strategy. It works in good times and it works in bad times. And real investing and the way you really grow your wealth, it is so boring. It's so boring because you don't do anything. You sit there, you let it grow. You have the managers, they rebalance it for you. And over time, you will get to your goals. Like Sabrina said, the people who are jumping in and out, the greatest thing, like look at cryptocurrency. I have an advisor out in LA. I will not even, she has conversations with even Steve. on the call here. I was like, no, you're not doing that. I'm not putting your money in that. And look, things are going bankrupt and stuff. That's not, again, that's gambling. So I help you stay disciplined, use academic based investing to help you get to your goals. And not only with just investing, with everything else too. Because when you get to retirement too, it's great that you have all this money, but if you don't have it in the right buckets as far as taxes or as turn it into a guaranteed income stream, again, we don't want you to have that happen, because I want you to have a successful retirement and a successful now. So I'm here for you every step of the way. So with that, I'm also, well, before I get to my call, I want to see, does anybody have any questions about anything that we covered tonight? If so, you could take yourself off mute, or you could write it in the chat and I'll try to answer it as best as I can. Or anyone?
I just had a quick one with when
Sure.
it comes to understanding, not even understanding, but seeing the standard deviation, we have to be working with someone. Because I was thinking of my investments, like I've never seen that before. Is that readily available, or is that only when working with like
Oh no, it's if you go look on the fund fact sheets, like whatever fund you're in, like say you're in a American Funds AMCAP, just Google it and bring up the prospectus or the fund sheet. It'll tell you right there. It's usually also abbreviated as either STD, not the bad kind. Yeah, it's
right.
STD or something like that. I don't know. You could see it on that, or Google it. Hey, what is I don't know, AMCAP's standard deviation? And all my reports, it'll show you. So if you have a statement, that's going to be my offering. So thanks, Nicole, for segueing. But if anyone else has questions, I'll come right back to them. What I'm going to do for you guys is, if you click this link, I'm going to put my calendar link in here again. Book a session with me. I will run your risk score, and I'll actually run a report for you based on your own portfolio. And we'll go over all the different, what your standard deviation is, how diversified are you. I find a lot of people, they think they're diversified, and basically their whole portfolio is concentrated, 20% of their portfolio is in 10 stocks. That's not really diversified. So I'll go over all that too. And like I said, that's my complimentary offer to everybody who's watching this and who's here with us tonight. And like I said, I'm going to email everybody after this, but sometimes my email, I end up in junk and spam. So please check that out. Also, feel free to reach out to me too. Sabrina has my contact information here. And if you're listening, well, we'll get to that. I don't even know my own slides. I get so excited talking about this. I don't know what's next. I have my book here too, which goes into further detail on actually how to invest, also how to get out of debt, how to actually supercharge your savings, how to build a tax-free wealth. It's called The Spiritual Path to Prosperity, The Truth About Money Revealed. You can go find it on Amazon now. It makes a great Christmas gift. It's good for children too, to educate them, especially young people just graduated college. Get started. You guys have it made. If you do things the right way now, you're set. You could have the tax-free retirement, have more money than you even know what to do with. You can take care of your old parents. No. So that's available. Like I said, my new book is coming out with the help of Chelly, who's on the call here. We're working on getting that out. That's Manifest and Invest. Live your best life, get your money right. So I'm going to give you some testimonials of what happened with people who I've worked with, I've done that manifestation technique with, talk more about your money personality, money blocks quiz, how to clear those blocks, a special chapter on women. So a lot of great stuff in that book as well. And then here's my contact information. You can reach me at 215-660-0288. Go to my website, dsfinancialstrategies.com. I work with clients all across the country. So I'd be happy to help you. So now let me circle back. Does anybody else have any questions on manifesting, how to live your best life, how to invest, anything? We got a shy group here again. Well, if nobody has any questions, or if they want to just reach out to me on their own, feel free to. With that, I want to thank you all for joining me tonight. And thank you, Sabrina, for helping me co-host this lovely event. We'll be putting
Thank you for having me.
You're welcome. And I hope you all have a great holiday. And also, don't forget to let me know what you guys have manifested. I want to hear all the great stories. Maybe I'll put you in my third book. So thank you all and have a great night.
Thank
Bye,
you.
everyone.
Thank you. This is great.
Bye.
Thanks. Bye, everyone.